What's up, guys? Welcome back to Road to the 2 Comic Club. Justin here. We're doing another recap, two-day recap for June 22nd, 25th. So Friday, Monday. So we're going to try to get it done quick. So let's just talk about how the stocks did. For some reason, I forgot to get the last screenshot for the stocks, how they finished. So I did get one of the news. So it does have the final prices, but only for a few. So the Dow did well, finished up 120 points. Well, 119. NASDAQ finished up or down 20, and you can see some of the other stocks did pretty poorly. We actually did lose quite a bit of money these 2 days, so you'll see how much in a second. In terms of trades, though, we did do some trades. So on Friday, bought a stamps call. So I'll try to post a little screenshot here. My goal for getting back into all these positions, and I mentioned it before, obviously is to get in at lower prices. So I will put down the price that the stock was trading at the time I got back into the position. And obviously I'm trading call options, so I don't know how those prices changed, but I'm just keeping track of the stock. Okay, so we bought stamps.com, January 17th, 2020 expiration, 280 strike price. Picked up an Align call for same expiration, $420 strike price. And then we bought two Tesla calls that expire January 2020 at a $420 strike price. And some of you may know the significance of that price, but we'll see what happens with that later on. Okay, now the OLED call that we did sell did expire out of the money, so we got to keep that $52. OLED did close at $86.45 a share. So on Monday, we sold another call, and I'll talk about that in a minute. But let's just go into the positions to see how we did. Now again, we lost about $5 grand this day, so it wasn't good, about 5,500 actually. Front page, so we're not going to have a lot of good performers here. Our front page, our best performer looked like AMD. They went up, our calls went up 4.29%. The second page, our hemp stock actually was our best performer percent-wise, went up 6%. And then third page, whole lot of nothing. Fourth page, again, I didn't bother checking these percentages because it's just too much work to edit all of these. It takes a lot of time to manually correct these percentages. So I only do the first three and the last three pages. So speaking of third to last page, we had some minor losses here, so nothing huge. Then we got a little bit of a bigger loss with our Universal Display stock. Right around now is when I think Universal Display was kind of bottoming out. So this was like some of the lowest points it's been in a while. So we are down about 80% at this point in time on our call options. So not good for that one. Last page, NVIDIA also took a hit, so we lost about 1,400 with that one. So you can see overall, not a good day. In terms of general news, trade war stuff again. So I feel like the only time you'd want to really read these is if you're watching this like way in the future and just kind of wanted to get a feel for what was happening at this point in time, because hopefully in a couple of years I'll hit the goal. I mean, I'm hoping, crossing my fingers really bad. But anyways, so I'm not going to really talk about these much. Now this article I will mention why IPOs are a boom, not a bubble. That's an interesting one. I'll again link to the description for that one. Kind of talks about the returns that they've been getting over the years and how good they've been. So it's pretty interesting. Okay, now the other one, beware of the Russell 2000, but should you buy the Dow Jones? That's an interesting one that kind of talks about that. And then the Dow snaps an 8-session skid, but logs the worst weekly fall since March. Again, trade wars is the reason for all that crap. Okay, and then with Google, this article is interesting. Why tech giants will love the Supreme Court's ruling for digital privacy. So it talks about why the companies will like that a lot because it gets them, I'll just kind of summarize it briefly, but it gives them a little bit of a leg up because they sell a lot of the data. So keeping the data private, because right now, before the government could say, we need to access your records to see if this person was doing this and this. It should be harder for them to do that now. And at the same time, consumers also want their privacy protected, so that could be good for them as well. Couldn't find an article for the smart speakers listen up. I couldn't find the full article for that. And then Charles Schwab, more tech stock outperformance to come. So that was a good article, kind of positive news about the tech stocks. And then that UPS reaches tentative deal with Teamsters. YouTube rolls out new benefits for top stars. There's actually 4 pieces of news in that video, so I'll definitely give that a watch. Some pretty interesting stuff there. Okay, next, let's go to the Monday. So again, going back to that trade, we sold another Universal Display call. The stock was trading around $82 a share at the time. We sold $87 strike. So collected about $57.33, actually what we collected after the fee. So that was pretty good. I've been averaging about over 50 bucks a week for the past 4 weeks or so. So I'm really excited about that. Let's see. That was the only trade we did. So let's just go straight into the positions. We did take a big hit today. We lost a lot of money. So on the first page, you'll see here, our only 2 really big winners were our puts. So it did help us. You know, if you add the 2 up, the QQQ put, we made almost $2 grand. And then we made $750 on the SPY put. So we made over $1,600, I think, in total, which is not a, you know, you can't shake a stick at that, I guess. That's a good amount of change to make when stocks go down. So I was glad about that, but overall, not a good day. And you can see here, second page, nothing good, nothing good. Even our third page, which is usually our winners, we have some pretty big losers here, even though not big dollar amounts, but percentage-wise, not good. Okay, fourth page, fifth page, and sixth page. I don't know, these are probably not even right. I hate that TD Ameritrade is like mostly wrong with these percentages, but anyways, here's the second to last page, and we had some big losers here percentage-wise. All of them were double digits except for the Universal Display stock. And then on the last page, we had some more double-digit percentage gainers. Netflix killed us this day. Google killed us. Nvidia killed us. Alibaba killed us. Like, those 4 dropped over $1 grand, and that one dropped over $2 grand for Nvidia. So we took big hits there, big hits. No es bueno. So the general news for this day, the 25th, was, again, more trading stuff. But this article was interesting. This 501-day trading streak for the Dow just came to a screeching halt, talking about how the Dow was above the 200-day moving average for 501 days in a row, which is crazy. It's about 2 years if you factor in trading days, not actual full days, but trading days. So it was about in June 2016 when that started. Now, a 200-day moving average, if you're not familiar, it's just they take the average price for the Dow or anything for the last 200 days and they average them out. And it's a moving average because it shifts every single day. Now, obviously, you don't want to be below that. So obviously, yeah, that's bad. Now, speaking of that, the death cross, this other article, forms in gold for the first time since 2016, even as stock market slumps. Now, the death cross is when the 50-day moving average falls below the 200-day moving average. So let's say the 200-day moving average is here and your 50-day moving average is here. 50-day moving average in a bull market will always be, like, usually be above the 200-day. So when it starts to go down and it crosses the 200-day, that's really bad. And that usually signifies the market's kind of turning into a bear market. Now, I don't believe it always happens 100% of the time, but it's just something to kind of keep note of. And again, I don't like to focus too much on that because it could be a self-fulfilling prophecy where if everyone focuses on that, the cross could trigger everyone to sell for kind of no reason, and then it kind of creates the recession. So, like, I don't like to focus on that too much, but it is good to note, again, I guess when it does happen, if you're a chart person. But anyways, I don't focus on it too much. I kind of look at the companies individually, see what they're doing, and stay on top of the news and see what's happening. But if I do feel the market's turning bear, I do try to load up on puts a little bit and move a little bit more into stocks. You saw me do that this year a little bit. But it's just like lowering your risk. Anyways, let's keep moving. Netflix, this company Naspers, I never heard of them, but apparently they're a huge funding company in Africa. In this article, his CEO talks 10-cent stake taking on Netflix and Facebook. They apparently owned a huge stake in Tencent, about like 30% at some point. And very interesting. So watch that video if you want to learn more about that. And then it's also an article, why is everyone talking about iQiyi stock? I think that's how you pronounce it. They're basically the Netflix in China, people call them, because Netflix can't be in China right now because of their laws, but they do license a lot of their content to iQiyi, so they're allowed to get their content in there. It's kind of like a loophole, sort of. But they're a big company. They I think they were from Alibaba or Tencent. I forget which one, sorry. But they spun off and had their own IPO this year, and they've been doing really well. So if you want to learn more about that, you can click that link. And then this other article is why Netflix Inc. stock was falling today, and tech safe havens amid rising trade tensions. I think that's a video, so that's a good one to watch. And then with Amazon, they're hiring more than 1,500 jobs in the upcoming $200 million facility, so that's pretty exciting. And then there's some more headlines here that I'll link to if you want to read that. Alexa can voice assistants introduce corporate cybersecurity risks. So that is something to worry about, I guess, for some people. You know, I mean, whenever there's technology involved, you can have, especially Alexa who's listening, you can definitely have some risks. So we're going to leave it at that, though. Hopefully you guys like this video. If you did, hit that like button and subscribe if you haven't already. And I'm going to get to editing this video, and then I'll get to the next one. So Thank you guys so much for watching, and we'll see you in the next one.